Okay, let's start. Today is January 25th, 2024. It's Thursday, so second last trading day in the week. So again, I want to make a quick review of the day and talk about some of the topics that I think are quite important in trading. So those are repeatable concepts. As always, the high level analysis always starts from the higher time frame chart. Again, I still think we're gonna make at least the measure move of the 3 weekly bull bars to here, which is also testing the all-time high close on the weekly bar, this close, or testing the all-time high. Both are possible, so 5,050-ish, 5,000 points. The daily chart of yesterday was a big surprise bear bar. I was really thought, it was probably going to be another bull bar, but it turns out to be a bear bar. And it was a testing of this tight trading range. So it's testing back down. And the entire, so the surprises really came from this, okay, from 69. And of course, this one is also a surprise. I didn't think that was accelerating down, but it happened. So this was a surprise. So today, the first topic I want to talk about is, again, I asked some of the friends in the Discord channel, when do you think that a channel or a pattern has matured? So this question, when do you think the pattern has matured? In this specific case, it's usually a spike and a wedge channel or spike and a three push patterns. When do you think this pattern has matured? And it should start correcting to the other direction. Well, of course, we all know that you can judge it from the leg counts, okay? We can say that, okay, this channel has 3 pushes, 3 to 4, 5 pushes. It should be enough. Yeah, that's a fair point. But is that enough? Right? Probably not, because a really shallow channel can push 80 bars, 100 bars, 120 bars, lasting 2 to 3 days. It did happen before, right? So judging on the leg counts, it's probably not enough. Okay, and the channel can easily last for over 6 legs. It especially the bull channels. So the next question is, then what factors? Well, the second factor is, can a counter trend scalpers make money? Meaning that are the gaps within the channels are closed? Okay, so for example, this wedge channel is probably, we had a very good breakout, but the follow-throughs are bad. And the buyers fading the lows of every channel, they made money. So that could be a sign that the channel has matured, because both traders can make money, and it's an early sign that we're transitioning into a trading range. But is that enough? All right. Probably not. And in fact, I think the number one priority for a channel pattern to mature is if there is a volatility contraction compared to the starting of the channel. So if you still remember, here's a quite interesting day, that we were breaking out above the hourly moving average, which is usually, this is usually bad for expecting a bull trend, and usually the market has to test back down to below the moving average period. So I thought, okay, this bar was doing the thing it was supposed to do, and it was doing it strongly. So I was really expecting something like, an upper trading range to a lower trading range, and we stay down here. But what happened that day was really, that was a rare event. The market started to spike up. Okay, so but if you can see here, if you see this channel, what's special about it? Yeah, the breakout is strong. Yeah, the breakout gap is holding open, or at least the body gap of it. You can see this one is not really. There was one bar testing back into the previous range, but not really that much. This breakout gap was still holding open by these two. Okay, so if you don't see the rest of the chart, you are going to say that this is not, well, it's unlikely that this one will produce a strong bull trend around a stop up here. It is very low probability. But what makes that reasonable is, the volatility start to dying. And we at least know that the market should correct. We should probably correct to here, the last sell climax. Okay? Which is why I took this long here and I held up to the sell climax. I couldn't remember which point is probably this one or this one. I think I held it through here. And then I didn't trade. And then until I see these two bars, I start buying again. All right. So the number one priority that I think the pattern has to mature is the volatility contraction. Okay. The volatility contraction means that the traders are not interested in trading with trend at least. Right? If, however, let's have a look at the other charts. You know, so one of our friend actually bought the below this bull bar, trying to scalp for a second leg. Okay, and the reason for that is, she thinks this one is a pretty strong breakout. Yeah, yes, it was at the point. It was a very strong breakout, but context-wise, it's not. Okay, we had a spike to a wedge channel. All right, this wedge channel. Okay, and the market, yes, the market is about to do its thing, which is two legs of correction. All right, but we're still within the range of the bear context. We're first breaking out of this tight bear channel, this parabolic wedge channel. The odds favors at least one more bear, and it is very likely that the with trend trader will establish something new, like a new momentum event, which means it's creating some new gap bars, and this is usually signaling, there should be at least some strong trending move in the opposite direction. In this case, you have to ignore that everything happens on the left with the bull. Is this strong bull momentum? Yes, it was. It was at the time. But once you see the bears establishing new momentum, you have to ignore everything on the left. You have to pay more attention to the with trend trader. Okay. Similar thing happened here. We have a tight bear channel. We had, you can read this channel as two parts. We had a bear spike, and the second part of it looks more like a channel. All right. And suddenly we get this strong bull momentum. Then some traders, beginner traders, they're gonna say, "Oh, we're gonna start a bull. We're gonna start a bull move, and this is going to turn into a trading range day. Yeah, it looks like a trading range. So I'm buying the lows. I'm expecting this one to test the high, right? No, you have to pay attention to this. Okay, this is the first time of a channel break. We're breaking out of it higher, so expect at least one more bear bar that's proportional to the size of the bear channel, or two bear bars, or three bear bars, something that's at least proportional to this. We had a one bear bar 42. Do you really think 42 is proportional to this? No, the size of it is not. And sometimes when the bear starts a new momentum, you have to discard everything on the left with the bull. You have to pay respect to the new bear momentum. And in fact, this one finally led to a measure move down, more than a measure move. So plenty of good trades here. If you just sell within this bar or sell the close of this bar, held down here, you would have made a much larger profit. So as I said, if the channel is not showing a dying momentum, sorry, no, the volatility is not contracting, and if it's expanding a new with a new momentum leg, you have to reestablish your evaluation for the previous trend leg. So this happened yesterday. Let's go back here. Yesterday was a surprise day, like I said, and we had three pushes down with 1, 2, 3. We had a channel overshoot. Okay, we had a channel overshoot here, and the market should correct for 2 legs, right? So buying the second entry bar, although it's an inside bar, but the context-wise, it's good. We have tested below the low of the day. We could actually test back up to the sell climax, which is at least back here. Okay, so that's a possible. Oh, of course, this one is also a pause bar, so testing back to that is reasonable, but you should at least give the market a try to test back here. And the only problem with this is what? There is not much volatility contraction. In fact, the final leg of the bear channel was a volatility expansion. It was going faster than the channel line and created an overshoot. So usually after this correct, it still needs a one bear bar size that's at least somewhat proportional to the last bear leg, which could be this bear bar. I'm marking it with a red arrow here, which could just be this bar. Okay, so which means you buying near the moving average is kind of silly. Or you can wait for this one to correct and then go the other way. So I don't know if you remember when this bar was forming, the 66 was forming, it was forming down very quickly. So that could be a sign of new momentum in the bear market. And also why that I thought that this bar was a surprise bar because it was going down faster than I thought. In this case, you have to discount everything the bulls really have and then look for potentially a new measure move, which we eventually made this measure move. So is this bull leg? Is this bull leg strong and has momentum? Yes. How can you tell that? Yeah, well, we have bars that have almost shaved open. We have micro gaps in between. These are good, but really it was testing to the surprise bar. It was testing to the range of the surprise bar. So buying here is at first it's not a very great buy. And second, when the bear starts a new momentum, you have to give up. All the bulls have to give up late. Right? Is there cumulative buying pressure? Yes, you can see that. You can see buying pressure cumulative. Is the context good for the buy? Yes, it is. On the higher time frame, we're testing the hourly moving average. On the daily chart, it is a new bull breakout, so the first pullback should get bought. But you have to, pay attention to the new momentum in the market, especially if the channel itself is not contracting. Similar reason for today, we had several nested channels. So the first one was this, okay, really tight channel. So when this start to correct and start to creating something like a buy vacuum test of the sell climax, it was reasonable to expect that. So it was testing the breakout point here. Okay, and then the traders would at least expect a small second bull leg here. So after 45, is 45 a great sell? Probably not. The only good part of it is, it's small and it's closing on its low. So maybe that's the only good factor, but I would at least expect a tight bull, a short bull bar here. But then this happens. When 46 happens, it is a surprise to the market. Is it really that much of a surprise? Not really, right? Because you expect a break of the channel, a correction pattern, and then continue, right? Why is that? Well, because the 45-minute charts favors a higher low major trend reversal. This could be the higher low MTR, but the bulls really need to go strongly in this direction. It needs to at least find consecutive bull breakouts above moving average, and it's still not doing that. But selling 45 seems like a low probability event as well because I need at least a bull bar here. It didn't happen, and instead it started crashing down. So while this bar was forming, your premise is still valid. You should just sell the close, sell here. And when the market tests back to that, it is also a sell, which means that this buy is low probability. Similar to the situation here, we had a surprise bar, we test back into the range of the surprise bar. This one was even bearish than that because this one actually closed above moving average. But again, buying here is low probability. And when the bears start to establish new momentum, you have to discard everything the bulls had here and start looking for new down. So although this bear had three pushes down, from here, if you think this is the first bear move, the channel phase had three bear pushes. This is the spike phase of it. The last bear leg still had quite a strong momentum. So it is reasonable to assume that the bears would have at least one bear bar or two bear bars. Um, so, seeing this, seeing 57, is that a good context for buying? Yes, it is. But the smart traders will wait on the second entry, similar to this case, similar to these cases. They would wait on the second entry. Okay, now bar 60 is the second entry buy. Is it good? No, because it's at the moving average. It has tail. This pattern is too big. I'm risking too much. So instead of traders buying the high of it, they are waiting for this 60 to trigger the long, and they are buying the pullback into the range of the buy signal bar, which is here. They put a stop probably below here, which is why selling here is low probability, because you expect the buyers buying the pullback of bar 60, and we start correcting. Okay. If you had, suddenly turn into selling here, you should have plenty of time of, to break even. Okay. And of course, the major trend reversal happens later with this late momentum. This channel, there's also a wedge channel here. Okay, so let's draw this wedge channel. At this point, we have three pushes. I'm drawing this with a green arrow. Okay. Is this bar a sell? Well, no, right? Because we just expand the volatility. We are seeing expanding triangle. We are seeing body gaps holding open, which means the selling here is quite dumb. And you think about MTR, you should be able to have a possibility for at least this going higher. So which bar do I think is a surprise today? Well, I think that this bar is a surprise. Well, why is that? Well, it's because we had a fairly tight bull leg up. So I didn't expect this one to crash down. I was expecting one more bull bar after this doji bar. And it started correcting down, but again, creating one more bull bar. So this bull bar is a sell to close. Right? And then the market needs one more bull bar on the 45-minute chart, which is, let me draw it. The third 45-minute chart after bar 18, which is this. Right? And after seeing this bull bar, I immediately sold above 24. I sold above the inside the doji bar here. So I sell within the range above here. So that's a sell. And I was expecting, again, one more bull bar in this direction, but then it started to crashing down. So this was a surprise. Bar, I would say the two bars in, the combination of these two bear bars are a surprise. So that was a surprise, which means the test back to here is probably going to fail, right? Is this a surprise? This one is also a surprise. Okay, 43 was kind of a surprise, but it is a buy vacuum test. So you expect at least one more bull push. So something similar maybe to 67, something similar to that. We had a fairly strong momentum leg up and then should create at least a small second leg. But it failed with a strong bear momentum. So this one is the surprise bar. This is also a surprise. All right. And the test back to it creates this final leg down. Okay, so final leg down, probably you can think of it as also a surprise, but not really, because we're testing the high of yesterday. This was a minimal expectation for the market to do before MTR can happen. Yeah, so that's everything. And then the bull MTR was kind of sloppy at first, but then with this late breakout, everyone was clear that the MTR was happening. So buy the close, buy the pullback, buy the pullback to breakout point. You can see the market front run that and expecting a reversal pattern. Okay, so that's all I want to cover. Remember that what to establish, when a pattern to establish, you need volatility to die down first. Otherwise, you always assume that there could be a possibility that with trend traders is going to sell strongly, and you have to ignore everything happens on the left of with the bull case, right? In the bull environment, it's similar. I just couldn't find a good example right now for the bull case. So this channel was a strong bull spike on the higher time frame, and you can see late. It is late. You have small bars, and then finally a big push. So it was at some point you can see the channel are converging. The channel lines and the trend lines are converging. So this is good for the channel to establish. So this one is also a channel, a wedge channel, and the volatility dies down. And this has better chance of correcting. This is a wedge channel. It's dying down, corrects. When you see a channel that's going parallel, the channel line and the trend line going parallel, it's usually not finished yet. Okay, that's in my opinion or to my experience. So this one probably not, but it corrects until it finds a new bear momentum starting point. So sell, reverse your position, sell, hold short, expecting second leg down, and the second leg down quickly dives into an II pattern as well. So this was bull channel with dying volatility. So this pattern has matured, but instead of correcting down, we correct up, right? So this is a surprise, 54, 55. This is a surprise. Okay. Just couldn't find any bull. This one is a bull channel, but the channel volatility, it was dying down here with a tight trading range and a final bull push. Okay, and this one corrects for 2 legs. Okay. This one is not pretty much not dying momentum wise. This is momentum dying, so converging lines, that's good for the channel correction. If the channel just goes in parallel, it can last for many, many days without correction for at least 5 to 6 swing legs in the same direction. Okay, so that's all. I hope that answers some of the questions.